In today's video, I'm going to be walking you through everything bearish about Bitcoin. Now, if you're joining for the first time and thinking to yourself, man, that's a really weird way to start a video, that's because in Wednesday's video, we covered everything that was bullish about Bitcoin and made the argument that a bottom was indeed in. So today, we're going to be flipping everything on its head, taking the devil's advocate position and arguing that a bottom is indeed not in for Bitcoin and why there is further downside. So if that sounds interesting at all, make sure you stick around for the entire length of this video. We're going to be covering everything from the 200, the 50, and the 20-day moving averages, and also some of the previous bear market cycles that were a lot worse than this one in certain ways. So without withholding anything else, let's go ahead and begin to dive into this technical and historical analysis of Bitcoin. Now, one of the first things I want to highlight right off the bat is looking at the 200-week moving average. On this 200-week moving average, I'm going to go ahead and switch us over to a log and an auto. We're already on the weekly candle chart for Bitcoin, and I want us to zoom out here. I'm actually just going to clear this off so we can just remove everything. And we'll restore it in just a second. But if we're looking at these previous bear markets on Bitcoin, then what we can see is that this 200-week moving average has always acted as a bottoming indicator for Bitcoin in pretty much every single major bear market before this. And I know what you're thinking. You're going, Brendan, I thought this was supposed to be a bearish video. Well, let me explain a little bit more. In 2015, this signified the bottom of the 2015 bear market. In 2018 and 19, it signified the bottom of this market as well. It also signified the bottom of the Corona crash in 2020. But here we are now, and for the first time in pretty much Bitcoin's history, especially in the last decade of Bitcoin, Bitcoin is now broken underneath this 200-week moving average. We broke down, we hooked, and then ever since then, we have been really just hovering below this level. And every time that we get near it, we see a rejection further to the downside. And even right now on Bitcoin, we are approaching this level, but we have not broken through it yet. And we can already see that momentum from the previous weeks has begun to slow, especially as we approach this zone. So this is the first time that Bitcoin has really kind of broken beneath this, and one could make the argument that this is because this is one of the first times that Bitcoin has ever really had to deal with a recession like this. So as Bitcoin is below this, one could easily argue that Bitcoin has rejected this area before, it can reject it here again, and if it does this again, then it could easily go to new lows. Another thing to look at is if we go ahead and we look at the daily time scale. Then we can zoom out a bit and say, hey, we are on the brink of a golden cross, which is when the 50-day moving average, or this pink line, crosses upwards over our yellow line, which is the 200-day moving average. When that happens, that signifies a golden cross, and that usually is a good signal-esque that a bottom could be near or in. But if we go back and we look at some of the previous examples on Bitcoin, even over here during 2020 and 2018, we can see that in 2018, even though we formed this golden cross, technically a bottom was in, but guess what? We fell from this top, from all the way up here, we fell another 72%. So were we clearly out of the woods? Were we into the next bull market? Absolutely not in this scenario. And even if we look at some of these other ones, over here we see another golden cross happen this was the death cross. Over here we see another golden cross which just turned out to be a fake out, and then Bitcoin immediately plummeted afterwards. And finally, I want to go back to an example from way back when in 2014 and 15, because over here in this example, we can see that there was a golden cross after the market bottom, and while almost all of these do signal that a bottom is indeed in, it certainly does not mean that all of the blood is out of the water yet. Because what we see here is that even though technically the bottom was in over here, we formed the golden cross right here when the when the 50 crosses upwards over the 200, this pink line over the yellow one right here. But shortly afterwards, right after this happened, right around here, we see that there was a major dump in Bitcoin's price yet again, similar to what we saw in 2018 and in 2020, right? So if we were to measure this one from its top to this fake out that we saw all the way down to its bottom, it dropped almost 38% more. So what does this mean? Well, it means that we definitely need to be a little bit careful about Bitcoin. Again, long term, I think that these are good signs that we are getting ready to see a golden cross. However, we need to be cautiously optimistic. I said this in Wednesday's video, I'll say it again in today's video. We can definitely start to be a little bit more bullish about Bitcoin. The price action is great, but there are warning signs that we cannot ignore. Now, one of the other things that we can do is actually measure Bitcoin's fall from its previous all-time high to the bottom of its previous bear market. In this example, we can measure where we were at around $69,000 up here, all the way to Bitcoin's bottom down here. And if we do this, we can see that it took us around, from top to bottom, it took us around 380 days, and we dropped around 77 to 78%. Now, if we're going back to some of these previous ones, we can see that in this example of around 19 to 20K, it took us around 367 to 368 days to fall about 84%. So almost the exact same amount of time, but it was definitely more volatile towards the downside. Now, if we're going all the way back to this 2014 example, and again, if you're wondering why I'm moving in 4-year cycles, that is because I believe that there is a correlation between Bitcoin's 4-year halving and Bitcoin's 4-year market cycles. So if we were to measure this one from top to bottom, then what we can see is that this one took us just over 410 days. So if we're looking at from the very beginning, it took us around 370 days in the most recent example, so just over a year. And if we're looking at this example, it took us around 410 days, so just over a year as well, just actually by a couple more weeks. And in this example, we fell by about 87%, give or take a little bit in case I mismeasured. But in all of these examples, Bitcoin fell around the 80, I would say between 75 and 85%, and it averaged taking just over a year for all of these bear markets to complete. Now, in these previous bear examples, in these previous bear markets, Bitcoin has been more volatile. This time we fell about 76, 77%, and in the previous ones we fell over 80%. So maybe that could be someone making the argument that we haven't fallen enough in this bear market, and this has also been the shortest of the past couple cycles, so we just simply have not been in this bear market long enough, or we simply have not fallen enough either in comparison to the previous bear market. So one could easily make those arguments as well, and it would be understandable. But I think that you also have to account that in these previous cycles, Bitcoin was significantly smaller, so it's going to be more volatile, which would explain the difference in how far Bitcoin typically likes to fall, because it takes a lower amount of money to move the market significantly further. And the example that I always like to use here is essentially if you have something that has $1 million market cap and $1 billion market cap, if you go in and you put $1 million into each, it would double the size of the market cap or cause a 100% move in the crypto that has $1 million market cap, but it might only move the crypto that has $1 billion market cap like 0.5% or a single percent, maybe at best. And so that's always something to understand and look into as well, because the market caps and the size of Bitcoin at these different market cycles was drastically different. I mean, we're talking about hundreds of millions, if not billions of dollars in difference here, especially from 2014 all the way to 2023, where we're at now. So hopefully all of you did enjoy this video. There's definitely plenty more that we could talk about here on Bitcoin, but I want to make sure that these videos stay relatively condensed. So if you want to see more information and more videos like this one, I can certainly make more, because we have pretty much infinite content when it comes to cryptocurrency. The space is ever expanding, and there's always something to talk about. So I hope all of you did enjoy. If you did, make sure you smack that like button, smack that subscribe button, and I will see all of you in next week's video.